Hello, I'm Gavin McGuire, Special Situations Analyst for Briefing.com. Today is Friday, December 4th. A volatile week in the markets comes to a close today. The market spent the early part of the week recovering from losses suffered following the pre-Thanksgiving Dubai news. This morning, the markets were given an early Christmas present as the best jobs data in nearly 2 years crossed the wires. We abruptly shot higher, hitting fresh highs in most of the indices. However, the market was turned on its head as the belief the Fed would act sooner rather than later to raise interest rates caused the dollar to march higher. After initially moving up with the dollar, the market resumed its inverse correlation with the buck and sold off, erasing most of its gains. The action reinforced the impact of the dollar on the markets, as for months investors have been using the greenback to fund carry trades into higher yielding assets. This reaction has put Fed Chairman Bernanke's speech to the Economic Club in Washington next Tuesday squarely into focus. The speech is scheduled for noon Eastern Time, and the topic is still to be determined. But given the move in the markets, one can be assured that any comments on the job market and interest rates will be closely watched. Adding to the impact is that this is Mr. Bernanke's last appearance ahead of the December 16th FOMC meeting, thus being his last chance to provide some clarity ahead of that statement. The rest of the week is relatively quiet in terms of economic and earnings announcements. With regards to the economic front in the United States, the start of the week will be very quiet, with consumer credit on Tuesday providing the highlight. News will pick up at the end of the week as trade balance data will be released on Thursday, and the retail sales report and preliminary December University of Michigan surveys will be out on Friday. There will be a couple of inventory reports sprinkled in throughout the week as well. Earnings will see some more retailers trickle out, headlined by the Costco report on Thursday morning. Outside of that, National Semiconductor will be the only name of note when it reports Thursday after the market closes. On the international front, the Bank of England will be out early Thursday morning, with markets watching to see if it expands its current bond purchase program. Earlier in the week, Brazil and the Bank of Canada will opine, with markets looking to see if raising commodity prices are pressuring inflation, similar to what we have seen in Australia. Current expectations are for both to leave the rates unchanged, but given its concern about the strengthening real, it is not out of the question that the Brazilian Central Bank will raise rates. Also of note, Switzerland will make an interest rate announcement on Thursday, with the markets expecting that country to leave rates unchanged as well at 0.25%. This is important as the Swiss franc has also been a favorite instrument for carry trades. We hope that helps prepare you for next week. As always, you can find up-to-the-minute analysis on breaking events throughout the week by visiting Briefing.com. Have a good week and happy trading.